Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 11th of July. US jobs growth rebounds strongly in June. The US employment surged in June, with non-farm payrolls reaching their highest level in 8 months. Payrolls rose by 287K, beating expectations of a decent 175K rise, while May's figure was revised further down to 11K from 38K. The unemployment rate rose to 4.9% from 4.7% previously, mainly because the labor force participation rate regained part of its May losses. Average hourly earnings accelerated to 2.6% year-over-year from 2.5% year-over-year previously. The dollar strengthened against its major counterparts on the news, but gave back most of its gains within the following hour. Overall, this stellar report could help ease some concerns regarding a serious slowdown in the labor market. Even though we don't believe that one encouraging report will be enough to nudge the Fed back into action in the short term, if combined with signs of stronger GDP growth and continued market calmness in the weeks ahead, it could revive speculation for a rate hike this year. Conditional upon this, we still view both September and December as live meetings, but we consider December as the highest probability candidate. We believe that the 2.5 months left until the September meeting may be too soon for the FOMC to conclude that the US remained unaffected by the Brexit vote, while the November gathering is just a week before the US election, a period that could be marked by heightened volatility. In Japan, the Nikkei closed 4% higher today, while the yen weakened somewhat during the late Asian session after Prime Minister Abe's coalition won the nation's upper house elections this weekend. Following the victory, Abe stated that he plans to add fiscal stimulus measures aimed at supporting domestic demand and accelerating the exit from deflation as much as possible. Contrary to popular market chatter, we believe that this announcement raises the likelihood for near-term Bank of Japan easing. We base our reasoning on the fact that in Abenomics, fiscal and monetary policies work side by side and support each other. In our view, this makes it unlikely that the Bank of Japan will opt to take the sidelines, especially amid a negative inflation rate, the general strength of the yen, and a soft manufacturing outlook. As for today, during the European day, we get Norway's CPI data for June, and expectations are for a slowdown in both the headline and core figures. Even though both rates are expected to remain above the Norges Bank target of 2.5%, slowing inflation could raise speculation for near-term easing by the bank and thereby may weaken NOK somewhat. We have only one speaker on today's agenda, Kansas Fed President Esther George. As for the rest of the week, on Tuesday we have no major events or indicators due to be released. On Wednesday, the Bank of Canada will meet to decide on monetary policy, and officials are expected to remain on hold. Oil prices remained flat on average, while the core inflation rate declined, but only marginally. Bearing also in mind the government's extraordinary fiscal stimulus measures that were announced in March, we agree that officials are likely to stand pat at this meeting. China's trade balance for June is also due out. On Thursday, the Bank of England policy meeting will be the epicenter of market attention, as this will be the first gathering following the Brexit vote. The official forecast is for the bank to remain on hold, even though we don't share that view. We believe that the relative market calmness following the vote may be a byproduct of elevated expectations for Bank of England easing, implying that disappointing the market could quickly turn this sentiment around. Indeed, market pricing currently suggests approximately a 70% probability for a cut at this meeting. In our view, the highest probability scenario is a reduction in the bank rate this week, perhaps followed by an expansion in the bank's QE program in August. Finally, on Friday, China's GDP growth for the second quarter is due out and expectations are for a slowdown. We also get the nation's industrial production, fixed asset investment, and retail sales all for June. From the US, we get retail sales and the CPI both for June. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.